All right. Hello, everybody. Welcome to the official Palantir Q4 2024 earnings live stream. We're going to be breaking down and doing a bit of a preview for the next 30 minutes on what we expect going into Palantir's Q4 earnings. And after that, we will get the numbers probably at 4 o'clock, 4:05. After that, we'll be analyzing the numbers for the next 40 to 50 minutes, and then we will have a call at 5 p.m. Eastern Standard Time to go deeper into listening to Karp, Shyam Sankar, and the rest of the C-suite at Palantir give us the results for Q4 2024. Now, before we get started, I do this. It's kind of becoming a tradition every time before earnings. I just want to say, regardless of what happens to the stock, this has been an incredible journey. I think everyone would agree that this has been one of the most amazing journeys over the past couple of years. It's been about 3 years for me now, over 2,000 videos, 200 episodes of Palantir Weekly Podcast, and lots of interaction with people across the world on this one subject that brought all of us together, which is Palantir. And it's been one of the largest blessings of my life. And I am very, very humbled to be in this position to be able to cover this company. And today is going to be another day in Palantir's trajectory to see if they can become one of the largest companies in the world. We already know they're one of the most important companies in the world, but obviously given what the stock did in 2024, was one of the best performing S&P 500 stocks, was up more than 400%. Now there's a lot of storylines going into Palantir, and we'll talk about it today. But regardless of what happens to the stock, I think it has been a community effort. It has been one of the most exciting efforts that we've all engaged in over the past 4 years, no matter when you joined the community. And we're here once again to celebrate earnings for Palantir. Let's get into it. I got a lot of people to help me figure this out because I have not done this on my own. It has truly been a community effort over the past 5 years. We got Vince, we got Amir, we got Matt Money, and we got Mr. Dom. What's up, guys?
Big Dom.
How you doing? I feel like you're like tempering our expectations, you know, when you made the opening, like regardless of what happens to the stock, I feel like we're going to get like a 20% drop or something.
Well, we got to talk about it. We got to talk about what happens to the stock, and we'll get into all that today. But before we get into it, anyone can go for this. Raw feelings, nervous, anxious. What are you guys feeling?
Never nervous when investing.
Okay.
Amir has balls of steel.
My conviction has not changed. My conviction has not changed since we started this. So I have a whole bunch of powder ready to go in case of something that would cause me to add even more past my normal DCA. And also, you'll be happy to know, Amit, Palantir became my #1 position with the NVIDIA drop. And
Hold on, Dom.
Wow, we got the soundboard now these days.
There you go.
Yeah. Where's the cowbell?
We're moving up in this world.
Moving up. No, that's incredible. Matt, your sort of gut feelings going into this earnings. Are you relaxed, chill, nervous? What are you feeling?
Well, it is what it is, you know. You can't really predict these things one way or another. So just kind of waiting for the numbers to drop. And even if they come in as you expect or slightly below or slightly above, you really don't know what's going to happen with the stock and what the sentiment is going to be. And I think the big piece is whether or not we hit year-over-year growth numbers that we might be expecting for fiscal year 24. It's going to be a lot of emphasis on the guidance that they're giving for 2025. And I think that's really going to be where the pivot comes in, if there is one.
I'm a little bit nervous or like I don't know if nervous is the right word, but I'm anticipating a drop after earnings because I have a hard time to get to the valuation we are in my valuation models. It doesn't mean I'm long-term not bullish on Palantir, but I do think that we did run a little bit too much too fast. And knowing what I know about the company, I don't really see how we scale to 40-50% revenue growth, which I think is needed to keep the price moving up or staying where it is today. And I hope I'm wrong.
Yeah, so let's get into it. First of all, I think it's okay for people to be nervous. If you're a nervous shareholder right now, obviously, first of all, you've got hard-earned money in the stock, and if the stock falls, you could see your net worth decline. So I think that's very important to keep in mind that we are real people investing real money into the company. But number two, the stock is up 10x, more than 10x from the very lows in 2022. And last year was the best performing S&P 500 stock, and it got into the S&P 500 near the end of the year. So when you talk about an incredible run and an incredible valuation that the market has decided to price in for Palantir, obviously there's a little bit of nervousness going in to a print where, as Vince said, can the numbers begin to justify some of the valuation we have? Or if the numbers aren't even that good, doesn't matter, given some of the qualitative aspects that the street cares about. So let me begin the coverage with these 5 questions and a clip from Carp from last earnings. And then I want to get everyone's take on some of the storylines that we've got going on. So what are the storylines? Number 1, is the SARS expense priced in or not? And how bad is the hit? How bad is the hit? For those that don't know about the SARS expense, that is a $120 million expense that Palantir is likely going to incur because the stock was above $70 for a certain amount of time and employees got to sell their SARS options, which is an expense that Palantir ultimately has to take. Number 2, does Palantir need to guide upwards of 35% year-over-year growth in 2025 for the street to be happy given the multiple it's trading at? Or can they be at 30% and below? And would the street be okay with that? Number 3, if top line growth isn't as strong, are free cash flow growth, operating income margins, which have been phenomenal for Palantir, rule of 40, etc., enough to allow the street to feel Palantir will continue to grow into its potential, even if top line revenue is not as 40, 50%, as Vince was saying. Number 4, if DeepSeek proved that LLMs are commodities and an LLM company like OpenAI is about to raise at $340 billion, what does that mean for a company like Palantir that's profitable and now growing in the public markets? And then finally, what does the government growth look like now with Doge, which has been a major storyline for the past couple of months? And can Palantir guide for some type of catalyst because of the government's willingness to spend more on software? This is a 2-minute clip from Carp in the Q3 earnings that I think sums up his philosophy on what he thinks about growth, margins, etc. So I'm going to play this clip and then get everyone's reaction to these storylines going into Q4.
An average normal way of looking at Palantir would be like, oh, great, you have a 44% growth on a $2 billion base in the US. And you have a rule of 68, get that 68 down to 50 and maybe you can grow. But in fact, that way of looking at a business misunderstands the way in which Palantir builds. We believe that by investing, and we know at this point, instead of trying to have 10,000 clients, all of whom hate you, it's kind of what people want, 10,000 clients that hate you, but they can't get your product. We want a smaller number of the world's best partners that, quite frankly, are dominating with our product. And the way you do that is by not blowing up your margin and getting 10,000 salespeople. It's actually by going deeper on the product. And in fact, what we see is the deeper and better the product, the more we drive sales, the more we have our cultural singular advantage as Palantir, not as a commodity product. It's like, we are not a commodity. We do not want our customers to be commodities. We want them to be individual titans that are dominating their industry or the battlefield. And we reflect that in how we do things. We are not trying to be your average Harvard Business School preferred company with like that reduces the margins, has a thin product, and then has a lower rule of 40 and presumably higher growth. By the way, I don't think you get higher growth than what we have. Honestly, although we of course are always pushing and want even higher growth, the people who tend to ask these questions tend to be modeling companies with 20% growth and lower margins. We have 44% growth in the most important market in the world, arguably not the only, but by far the most valuable market in the world, while having a rule of 68, i.e. the best in the world. And we're going to maintain the contradiction of having both high margins and high growth. It's not one or the other. They're actually interplayed and they're not a contradiction. They power each other. That's how you know you have a world-class product.
I think we'll get more of the same from Carp today. Dom, let's start with you. What is the biggest storyline you're thinking of going into earnings?
I mean, I think it's SARS. I mean, I just don't know what the market's going to respond to that. We didn't see a lot of people place that into their valuations. I thought maybe we'd see some people change their valuations last minute. So depending on how bad that miss is or how they augment or spin that, I think will determine where we go, whether up or down. So that's kind of my big concern. And then at the same time, to Amir's point, maybe they mitigate it if they have some crazy guidance for the positive.
Amir, what is the biggest storyline you're looking at going into this call?
Well, just to comment, I'm really curious about the SARS as well, because I kind of changed my stance from initially believing that it would be a catalyst for a lot of selling. And I believe that, well, some analysts have come down. Raymond James is one. Mariana came out with $90 price target today. I haven't read the report, but I wouldn't be surprised if she also lowered her estimates. I kind of believe it's kind of easy to for management to talk that away. It's a one-time expense. It was in the prior filings. I mean, it's all out there. So any selling due to that specifically, it's kind of, it would be stupid, but a lot of stupid things happen in the market, so we never know. The current estimates that I can find are 3 cents, which is down from 5. So it has been lowered a bit, but I still believe 3 cents will be too hard to hit. I have them at like 2, and I'm kind of optimistic. So we'll see about the SARS. The biggest thing for me, honestly, is just seeing pricing power with AIP, how that's scaling, and that should show in net dollar retention. And also I'm expecting a lot of total contract value, because that shows confidence into future growth. I think most investors at this point in Palantir is trading so expensive, overvalued according to many. But if we can see some kind of evidence that the future growth is really there, for example, total contract value, we know that Q4 was crazy with a lot of contract activity. I think that might suit the markets. Soothe, is that how you pronounce it? I don't know. But yeah, that's the main thing for me, just seeing those scaling levers at work.
Okay, Matt Money, we talked a lot on Palantir Weekly on Friday on your expectations for growth projections. What do you think is the biggest storyline going into this earnings?
I think it's this continued dominance in what they're doing, right? I think AIP has been a huge differentiator for them for the past 18 months, and I'm hoping they continue to build on that momentum. Whether or not you believe it based off this earnings call or not, this will eventually be $1 trillion business. And regardless of what my short-term sort of mentality is on the stock price and potential stretch in the valuation, I've held that. Initially when the direct public offering happened, 200 billion was kind of my initial thought, and ever since I've been able to see these guys execute and where their heads are at, that changed to 500, and it only has increased to $1 trillion based off of what I've been able to see. And I'm very confident in that perspective. What am I looking for specifically for this one? I am kind of curious around the SARS as well. Do you take it all up front? Can it be split up into multiple quarters over time? How does that actually work? It's very curious to me. While they might be awarded, they might have some sort of time component to them still. I don't know how that part of it works, right? So very curious to see how that kind of works. But both I'd say the continuation of AIP and the SARS component I'm kind of curious about. But I will say it's pretty interesting that you can take such a large impact of $150 or so million potentially from SARS, or 100 to 150 million, depending on what it is, and still be net income positive. And they just guided it, right? They said it specifically in the 3Q earnings call that all the quarters will be, and especially next quarter, will be GAAP income net positive. So we can at least know that even at that point, when they were above $60 a share at that point, likely, or close to it, that they still believe that they're going to be GAAP positive. So I don't really see that SARS number showing up as too much where you end up having a negative income print.
We have some quick CNBC coverage on the recent upgrade. Let's go to that, and then we'll be back.
17 minutes till the closing bell.
After a brief sell-off to start the year, optimism seems to be growing around future orders. Analysts at Wedbush Securities citing what they call unprecedented demand, while BofA raised its price target on the stock to $90 from $75, telling clients that the recent DeepSeek news highlights the AI software names like Palantir that cannot be commoditized. That's their view. One question on the street: does Palantir CEO Alex Karp plan to increase spending on scooping up some of the smaller competitors? A report indicates a potential investment in Shield AI. That's a drone startup that counts the U.S. and Ukrainian government as customers. Currently across the street, 3 buys, 14 holds, and 6 sells on the stock in the options market right now, indicating about a 10% move in either direction after earnings hit. Mike.
Yeah, it's a divisive stock, loved by retail. The street's a little bit wary of that valuation. See how it breaks after the close. Thank you.
And obviously, yes, it is loved by retail, but we have seen institutional holdings go up by, I think 20%, went from 30 to 55 over the past 6 months. So, Dom, how are you thinking of institutional exposure to the stock, and do you think they are ready to buy more of this even at these levels?
I think they do if this drops, for sure. The more and more what we've observed with the CNBCs of the world and legacy media is they like to provide fear mongering and valuation and looking at things in spreadsheets. And if there's something that the retail community has picked up on, starting with Tesla to Palantir and others, is if you can identify the long-term growth trajectory and what the company can be fully capable of and its optionality in the long term, who cares what the valuation is now? I'm holding this thing for 10 years. Most institutions don't do that. But I think that as you're seeing more and more see the long-term growth trajectories, I think we could see it even go more once it dips.
I think that's a fair point. Amir, what are you thinking about when it comes to the numbers institutions are looking for on this print?
Honestly, from a logical standpoint, I don't think there's anything that Palantir can report that would be satisfactory to Wall Street, like if they were to actually base it on just numbers alone. I think at this point, it's all about momentum and belief into the future, which most of us have. As for the institutional holdings, I'm kind of curious if someone has. You can probably do the math if you look at the weightings inside the indices. If you just subtract the indices, has actual institutions gone up? I'm not too sure. Maybe, probably. I mean, it's gotten a lot of attention, so probably. But I think most of that is indices, which is fine. We welcome it. It's been a core driver of this run, which is of course welcome. But I mean, just looking from numbers perspective, their estimates are super low. So Palantir will likely beat on revenue. On net income, it might be hard on EPS because the SARS, of course, which we didn't even mention this, but there's no guarantee that SARS will hit. I mean, we made the case that it's likely, but we don't actually know. It's Palantir. Anything can happen. But yeah, like they will probably beat, but that doesn't mean that is satisfactory from a valuation standpoint. So I'm not really sure what they're looking for. I mean, it's kind of like 50-50, like coin toss. Like you never know with this stock.
Vince, your thoughts? Also, Vince, we have people saying they are way too distracted by your glasses, so you might have to take those off. You're muted right here. Yeah, what are your thoughts on institutional exposure for the stock?
Yeah, I mean, I think CNBC, I think they made a mistake there because in my recollection, it was retail first, and then the institutions fell in love with the stock, and they made it seem like institutions were early, and now like retail is driving the stock up, because I have a hard time imagining that retail had the money to take it from 40 to 60 to 80, because it needed many billions of dollars. And to my knowledge, I don't have this, and if some of the viewers have it here, then hey, what's up? I have a link in the description box below, you can visit. But so yeah, and I'm not really worried about the institutions. It's and in the long term, I think that this earnings is not so significant because Palantir is very well on track as it is. What I'm worried about more is that they're going to report a fantastic quarter, and let's say they have 29% growth, and like the same margin as last quarter, which by any account would be a fantastic quarter, but somehow the street is expecting 40 or 45% growth, and then it will be sold to, yeah, like we will have like a minus 15% day. Like that's what I'm worried about.
Is one of your other larger fears, Vince, that this valuation, or let me ask a better question. What do you think is driving, and I would love the chat to participate as well here. What do you think is driving the valuation? Because I think everyone can objectively agree at a 70 times price of sales, Palantir is one of the most expensive names in software. Nonetheless, a lot of people continue to hold the name because they believe in the long-term vision. What do you think is driving the uptick in valuation?
I mean, my honest theory on it is that one, there is a very loyal shareholder base that is holding it for the long term. And honestly, there's like, yes, the price is very high, but there's no reason to sell the stock. Like there's literally not even a dark cloud even coming on the horizon. So, and then, the buyers want to get in, and when there's no sellers, then the price has to go up.
That's fair. Dom, same question to you. What do you think is driving the valuation here?
Put it in the chat. It's the business model, the rule of 40, and the split actual business model of government and commercial. Government is believed to be more sustainable, so kind of a safety net for them. However, I think with Doge and all the reformation that we're going to see in the next 4 years, it could be a catalyst and continue to outgrow commercial, especially with the size of those contracts. So I think just overall, the rule of 40 plus they got 4 billion plus in cash, zero debt. It's a clean company from that perspective.
Let me put this question in the chat, and then I want to move over to you, Amir. What do you guys feel? So 2 numbers from everybody. 2 numbers. You can put them both together, separate them by a comma. What do you think the growth rate is going to be for Q4? And then what do you think the guidance is going to be for 2025 growth? What do you think the growth rate is going to be for Q4? What do you think the guidance is going to be? I'll start off first. I think they're going to grow 30% in Q4. I think they're going to guide for 32% in 2025. Amir, what would your take on that be?
31 for reported quarter and 30 for the guidance.
Matt, any thoughts on guidance and growth rates?
For the fourth quarter and fiscal year 25?
Yeah.
For fourth quarter, I think I had 27%, but based on the conversation we had with Arnie and them, makes me feel like they're going to end up coming in at like 31, 32 because they've been under forecasting. But I'll stick with my 27% because that's what I've written down and posted on multiple articles at this point. The fiscal year next year, I think they're going to end up at 20. I forget what I said, but I think it was less than 30%. I'm thinking they're going to end up at like 27 to 28%. So hopefully they end up closer to 4 billion, but in terms of revenue, but I think it'll be hard pressed. They'll probably end up at closer to 3.75.
Dom, how do you think they're going to guide for 2025?
So I think Q4 will be 29%. And I think you're saying guide for the whole year?
Yeah. Yep.
I would say 30.
So all of us are kind of aligned. We're all in the 30s range. And I think that's because all of us realize that if it goes into the low 20s or mid 20s, it's hard to be able to say.
You left me out.
Oh, sorry, Vince, you as well. I didn't see you because the glasses, I wasn't able to see.
I took them off long ago, but maybe they got burnt into your eye or something. No, I also think 30% growth and 30% growth next year. And it's very interesting because like everyone seems to be in this range. Like if you look in the comments, it's very interesting.
Well, why do you think that is? I think there's a definite reason for that, but I want to hear you guys. Why do you think that we all are in the same boat and in the same range?
Well, I can give my reasoning, and just historically, they've been very timid with their guide, and also Wall Street doesn't expect a lot. So if you were to beat expectations on guidance, you don't really need to overreach at all or overextend. I mean, just 30 is still above what the street expects. It's above what the street is estimating for the next year. It's safe. You can always raise the guidance as the quarters go on, which gives you another positive momentum, catalyst. So there's no reason to go for something higher, even though I personally believe that we might see a 40% year. Personally, but I think the guide will be low because it's just what management has been doing historically, and makes sense to me too as well. As long as the street is so misinformed and so wrong with their estimates, then why overreach?
Yeah, I agree. I think everyone's looking for that 30% range. I also think I think they can get to 40% growth, but I think they would not guide for that because they would want to underpromise, overdeliver. I see some people in the chat asking about SARS. The quickest way to understand it for those that are here for the first time and have not caught this headline is that Palantir had a agreement inside of their filings that if the stock was above $70 for a certain period of time, employees, based on how long they've been at the company, would be able to get the difference between 70 and 50, which was their strike price essentially on these SARs. So it was $20. And if you had 1,000 of these, 1,000 of these SARs, you would have $20,000, right? Of essentially kind of free money for being an employee. It's the perks of taking a lower salary instead of working at Google. They didn't expect this would happen until 2029 in Palantir's filings. It happened in 2024. As a result, there is about $120 million expense that we don't exactly know if that's going to be $120 million. Maybe it's $70 million, maybe it's $80 million, maybe it's $50 million that Palantir has to incur legally. And that is going to be a hit on that top line earnings per share number. I think the street's estimating 3 cents, right? Amir, you said 5 or 6 cents, and we might come in at 1 cent, which obviously would be a 90%, 95% EPS miss. That could send the algos taking the stock down. If that happens, I think there's an opportunity there, but obviously that still could lead to some volatility. So we're going to have to see in the next at this point, 4 minutes, how this ends up playing out.
Do you think also, and I think Amir hit a lot of good points on the slow, like kind of not slow growth, but the consistent growth, is that their business model, they're going to do things their way. I think maybe they learned from the overpromise and underdeliver piece when they had the 5 years grow 30%. So kind of, all right, we learned how we play the Wall Street game, but moving forward, they know if that, you know, he understands his business model. And you saw in that interview, like I think the most impressive thing we've seen in the last year and a half is how much Sham and Alex understand the business precedents of their business and the margins and everything else. Someone put in there 50% free cash flow margin for next year. I totally agree with that. So they can take advantage of just slowly growing, and then they probably have a good idea when that NVIDIA breakout is going to be.
Yeah, and I agree with you with the under promise, over deliver stuff, because they did say 30% growth a couple years ago and they weren't able to live up to that. Obviously, 2022 happened, the whole market crashed, but it's better to be a little bit more conservative here than not.
But you know what would be so crazy? Because even after they dropped the 30% guide, like compounded for 5 years until 2025, he removed that, and then he got pressed by CNBC in an interview. He said, well, what happened to that 30%? He said, he reiterated even after the fact, he said, I'm driving the company to do 4.5 billion in 2025. I actually believe that they have an opportunity to actually do 4.5 billion, and Karp would be right again. How many times has he been early? Said like, yeah, this is going to happen in a couple of years. Imagine he is right on that reiteration. I think that happened summer 2023, so a year and a half ago. So it's not that long, and they dropped the 30% after 2022 Q4. So I mean, it would be crazy, and I think it's possible that it actually drives them to 4.5, which is like NVIDIA moment, because that's like close to, I think that's like 50% growth. I think it can happen, actually. No, not ironically, I think it can.
Vince, go ahead.
Yeah, I just wanted to say that maybe I misunderstood Don's question, but do you mean like why 30% and not like 60, 70, 80%? And
yeah, I mean, no one's calling for a large growth. We're all in that same kind of safe zone.
Yeah, and my answer to that would be is because Palantir is I'm joking, but as a consultancy, no, okay, end of joke. But it's more like they have a way with their customers that they have to custom build the software to the customers, and then it needs to spread within the organization. And they are obviously not a consultancy, but I think that there is like a natural limit to how fast they can grow within organizations. And this is why
beautifully, like to that point, I didn't even think about that, but like, they are so customer obsessed on results. Yeah. They would rather focus on that than what revenue they get from that customer at that quarter.
Exactly. And I mean, you know,
I gotta cut you off just for a second to end out the close, and then we'll get back into our analysis. Here we go, folks. Palantir Q4 2024 earnings, 4 p.m. The stock market is now closed. Palantir closes at $83.92. We're probably going to have a couple minutes until we get the results. Vince, go ahead. You can continue.
I kind of lost my trail of thought, but yeah. So
why do you expect them to do 30% and not 70% growth? Basically?
Yeah. So I think that there is like a natural gravity, or I don't know how you can say it, that they're not able to grow like 80 or 90 or 100% per year. Because of how they set up the company. And I want to stress that I don't think it's wrong. And I think that 30% or 27% compounded annual growth rate over many years is completely insane and is a mark of an insanely good company. So there's nothing wrong with that. I just think somehow the expectations of maybe Wall Street, not retail, but maybe Wall Street is like ahead of the company a little bit, or what they can deliver. But and I hope I'm wrong.
All right, so now we wait. We will all be verifying the stats on external sources to see. Obviously, we'll see what the stock does. It's right there, but we should be getting numbers probably in a couple minutes, maybe even in a couple seconds. And once we get the numbers, we'll see how the stock reacts going from there. Most of you guys voted for 30% growth on the guide. About 37% of the chat voted for 30% guide for 2025, which I think is reasonable. I think Palantir really wants to hit 30%. I think psychologically being at 30 versus 27, 28 is important. So we will see that guide pretty soon.